banking system as a whole really has an impact. Keep in mind the banks are going to go to the Federal Reserve to borrow money, but that doesn't mean that they're not going to have an impact on you on a regular basis. Look at these banks' holdings in trillions of dollars. JP Morgan, Bank of America, Citigroup, Wells Fargo. We trust them at some extent, except one of them was involved in major fraud across the entire United States. Of course, they got censored. What's nice is somebody went to jail over it a couple of times, which is almost never happens when it comes down to the bankers. So that being said, a lot of things happen, but let's talk about the system as a whole. There's commercial banks, which is where businesses go to borrow money, okay, and they have to pay interest on that. There's savings and loans, and really the bulk of the business of saving loans is they loan people money to buy houses through mortgages. Okay, a lot of times we call them S&Ls, sometimes we call them thrifts. THRIFTS, thrifts. So you got three different names for it. Savings and loan is the official name, or an S&L, or a thrift as you go through the process as well. Another one is called credit unions. And frankly, I recommend you all have an account in a credit union, primarily because number one, a credit union is not supposed to make a profit. It is a nonprofit, member-owned system, which is wonderful. You get to have input into your board of directors. You get to actually vote for them as you go through in the process. But a credit union doesn't loan money to businesses, and they seldom really get involved in the mortgage market. You have a series of things too, part of the system called non-banks, which has really increased dramatically in the last 2 decades. And they're involved in different aspects of the finance system as well. So let's go through and talk about them. Commercial banks, they want to make a profit. They have depositors and they have borrowers, and that's about it, okay? And they loan money to whoever, whatever in the process. Their goal is to make money by loaning money out to people and also having people come in and deposit money with them. And in return, they give them an interest rate, which has been very low recently in the process. So here's what we're looking for. Look at the desire for all of us to have mobile banking. We want our money now because we're Americans. That's about what it comes down to. You want to have low fees, you want to have safety, but of all things, you want mobile, because that's who we are in the process. A couple terms on commercial banks. You have a demand deposit. It's another word for checking account. It just sounds cooler. It's a checking account. I want to have my demand deposit over here. Okay, so money can be withdrawn anytime on demand from the depositor. So you issue a demand deposit. That means a person can walk into a bank and demand a deposit into their account from your account, demand deposit. Sometimes you have a time deposit. It's a savings account. So you got your savings account, the money sitting there, and the bank tosses. Over time, they put different amounts of interest in your bank throughout the entire year as you go through. Sometimes you have a certificate deposit, sometimes called a CD, and that's where it earns interest. And you get the interest all when the certificate matures on this maturity date in the process. So sometimes on an international basis, you have different rates happening. You have the United States, you have Japan, you have Germany, and they got their central banks all operating. They've had a lot of problems in Europe over the aspect of their banks are struggling, and actually we're paying more than their banks. And they're almost, because the economy is so weak, the interest rates drop below zero because they're just trying to sit down and puff up the economy back so people can start spending money, and they're giving money away at a discount, which is kind of a cool thing. So all kinds of things happen out there, and banks are all part of it because they tend to be the arm of their version of the Federal Reserve System that we have here, and they have their own version in their countries. The S&Ls, they accept both savings and checking accounts, and they provide a lot of home mortgage loans. They're known as thrifts because the original purpose was to promote thrift and home ownership, and those are the roots. So keep in mind, savings and loan, S&Ls, thrifts. I toss it in there sometimes because I want you to sound like you are a college graduate. When you talk to people, say, yeah, I went over there and I checked out the thrift over here and I got my home mortgage on it. And you sound like you really know your stuff. And I want you to, this part of the class. Here is one of these deals. You work at a bank that opens accounts for new customers. They got a policy, you get bonuses if you open more accounts. Your manager says, when opening a new savings account for customers, you can add another account, such as a credit card, and they don't even have to know about it. Your manager tells you this. That means your manager is giving you a secret message, secret message, secret message. You know that opening an account without the approval of the customer is not proper, but you also know that nobody will know because you're not going to send them their credit card. What should you do? Should you open that account and get a bonus on it and your manager gets a bonus? Or do you sit down there and because the customer didn't ask for it, you ask all prim and proper and don't do it? Well, guess what? One of those major banks on there, they did exactly that. They had massive widespread fraud across their entire system. A bunch of people were fired. A couple went to jail, rightly so. They were committing fraud by opening credit card accounts on people who didn't know they had a credit card account. And because of the fact they would get bonuses, but no card was out there. But what if that was you? And what if somebody did get a hold of your credit card number and started all of a sudden racking up thousands of dollars of bills and you had no idea it was all going on? Your credit's damaged, maybe irreparably, or at least for the next 7 years, because somebody wanted to make a commission behind your back. What do? Is it ethical? By the time it was done, it was determined it wasn't ethical. So be careful about this aspect of it. Make certain you're going to somebody that you trust in the process. That's why I encourage the credit unions. They're nonprofit, member-owned. You have input in the process. It's really good. But eventually, somewhere along the line, you're going to have to visit a thrift or S&L and borrow money. Somewhere, if you have a business, you're going to have an account at the bank. If you have an account at the bank, have it longer term and work a relationship with you and somebody in the bank in case you need to borrow money from the bank in the process. Non-banks, they include a big part of our economy. Life insurance companies, we don't think about that because normally we don't want to think about dying because we're human beings and that's not a fun thing we talk about all the time. Hey, I plan on dying next year. How about you? We don't have those kind of conversations in the process. So we tend to ignore them, but they're a big part of the economy because people buy policies and the money can sit down and depends on the life insurance policy that you have. They invest it, and they get interest back in the process. There's pension funds. Pension funds can be enormous, totaling in the billions and billions of dollars. One of the biggest ones in the world is called PERS. Then that really is here in California, Public Employee Retirement System. And that being said, they invest billions of dollars into the market. They also brokerage firms. That's also when you have a margin call on stock. We heard about that previously. And there's commercial finance companies out there. Be careful about them. Sometimes they'll charge you 18% interest rate to 24% interest rate. Once upon a time, that was called illegal corruption and fraud. Nowadays, it's called commercial finance companies. Okay, you can usually get something a lot cheaper at your local bank in the process, but they want to have some type of security on it called collateral and corporate financial services. All these groups, they're non-banks. There's a large group of them. So know a couple things. Commercial banks, what they do, savings and loans, credit unions, what do non-banks do? And of all things, what a demand deposit is just for fun. Take care.